Hello traders everywhere, Adam Hewison here, president and founder of iknow.com and co-founder of MarketClub with your midday update for Tuesday, the 13th of November. Forget about the fiscal cliff in Europe. That's all you can hear everywhere on these markets. At the moment, the complexity of all these different economic forces is more convoluted than any one brain can figure out. The good news is that the reality is the markets will tell you what they want to do longer term, and that's what a trader wants to see and what the message a trader should listen to. You know, some of the best paid minds in the business are paid to figure out these problems for you. All you have to do is listen to what the market is telling you through our trade triangle technology. The theory and the reality of trade triangle technology is that big money must make a move in order to protect and grow its own capital. That means that big money, i.e. big positions, have to move in or out of a market, and that's where our trade triangles shine. Big money has to make its footprint known in the markets. It cannot avoid this one simple fact because of its size. Price action, I'll repeat that, price action is the number one indicator of trends in big liquid markets. Now, we've been talking about this. Be prepared this week. Pay close attention to gold. We're looking at it today. A move over 1,738 will indicate that all is not well in the world, and you should move into gold, either buying a futures contract or futures contracts, an ETF, GLD or IAU is what we recommend, or physical gold. We'll also be looking at two stocks to buy today, Delta Airlines and ProShares Ultra Short QQQ. It's an inverse ETF. Also, two stocks to exit today immediately, Monsanto and DirecTV. So let's go to the board and see what's going on and see what we can find out. So let's start as we normally do with the S&P 500, which is up today. If you remember, let's go to 6 months, 3 months, 6 months. Let's just go to 3 months today. You'll see we've had, yesterday was a doji line. A doji basically indicates a total balance between sellers and buyers. Very quiet day yesterday, some computer problems in New York. But the reality is we're up today and we're higher for the week. So with the absence of any really positive news, we're going to see this market, I think, bounce back up to maybe the 1400 level, maybe the 1410 level. But you've also, if you look at our trade triangles, we're still saying that the major trend is up longer term. Now, if you remember, we were saying last week or the week before, basically to sell maybe the Dow against the S&P 500 or even the NASDAQ against the S&P 500 because they're in downtrend. So we'll be looking at those next. But this market looks, if we close up here, then I think we'll see a little further bounce maybe for the next week or so on the upside. So let's go to our next market. That's going to be the Dow. Very similar pattern there, except the Dow has all of our three triangles negative, meaning a strong downtrend, minus 90. We may still see a bounce in that market, but nonetheless, the trend is down. You can see we've had two doji lines, right? These lines. A doji line, let me just explain what a doji line means. If you have a move in the market, so let's say that's 1 day's price action, and the market closes like that. So it really opens and closes pretty much where it started from. It means there's a balance between the buyers, let's say the buyers are here, and the sellers. So no one force has an advantage. So usually this type of scenario can indicate a turning point, much like it did here. And much like it did here, you had a little bounce. So I would not be surprised with these two doji lines to see a little bounce here, maybe in the next several days. So let's clear the screen, go to our next market. And the next market we're looking at is going to be the NASDAQ index. And the NASDAQ made new lows today. That is still not looking good. Of course, the technology sector is weighing very heavily on this. Apple, of course. And we're minus 90. So the trend is definitely negative. You can see now how important trade triangles are. Now look where we first got really exited this position. And that was on the 9th of October, rather. And that's over a month ago. We were saying stay on the sidelines, and look what we avoided. So we basically would have avoided, there's the signal right there on the 9th of October, and that was at 3,080. And you can see how we've just come down. Didn't say go short, just said exit and be on the sidelines. Now we've had a confirmation that the major trend, which is this one right here, is down, indicating further price erosion in this index. So that's how things are stacking up for the NASDAQ. Doesn't look great. We may see some more sideways action if we see a bounce in the a bounce in the Dow and also in the S&P 500. So let's just clear the screen and go to our next market. Next market we're looking at is crude oil. Now, crude oil has kind of flattened out a little bit here, trading between the 84 level and the 86 level, 86.50 level. But it is, I believe, let's see, we closed last week, we closed last Friday at 86.05. So it's down a little bit for the week. So nothing to get too excited about either way. So let's just let that play out. But the trend is on the downside basis are trade triangles. You can see a couple of things there. You can see the trade triangle here at 94.63, indicating the intermediate term trend was down. And of course, it got that completely right. It's saying the longer term trend on 11.4 on November 4th is 84.66 is down. And you can see the market sort of flattened out. So we'll have to see how that plays out. Would not be surprised to see a rally in this market as precious metals and commodities come back a little bit. So don't rule that out. So moving on to our next market. This is the Eurodollar. And as I said, forget all the hype with the Eurodollars and all the stuff that's going on in Europe. That's just a mess. But you can see technically, in fact, if I go out, let's say a couple of years, you can see how this pattern looks much clearer. You've broken this trend line. If you just put a trend line in from this level here, this is going all the way back to the July of 2012. And you just put a trend line in here. You can see how that trend line's been broken. We've come down. If we put our Fibonacci in there as well, let's just put that in there. And we've talked about coming down to the 125 level. So 124.70, somewhere like that, could very well be in the cards if we scope this in closer. So you can see basically you've broken the trend line. You're coming down into some Fibonacci nests around the 150. 50% is 126. And also 61.8 is around about the 124.70 level, 125. So I think that's where we're heading, in my opinion. So we'll have to see how that plays out. But generally speaking, the only trade triangle that's positive is the long term. The intermediate and the short term are both negative at this point in time. So let's move on to our next market. This is gold. This is where this is where I think you should really pay attention to. And that is, if we hit the number we're really queuing up on here is 1,738, just missed. Okay, 1,738. In fact, let me just do that again. $1,738. That is where we're going to really get serious about buying a lot of gold, because that's really going to trigger all of these trade triangles. Then will turn green and indicate that we're going higher. I think we'll be testing before the end of the year. I think we'll be testing this level, and I think early next year we'll be testing and moving over the $2,000 an ounce level. So let's see how that plays out, but really pay attention to this number right here. This is the key. That's a trigger. So if we get there, pull the trigger and get long. So let's clear that screen off and go to our next market. Next market is going to be copper. Copper is actually seeing a little bit of a bounce, not too dramatic, but it looks like the momentum has at least slowed on the downside. You're plus 55, meaning it's a trading range as opposed to a strong downtrend. You are seeing the MACD is just barely turning up, hasn't turned up yet, but that's something to watch very carefully. And let me just do one thing while we have that below chart studies. Let me just take off the volume. And let's go to our next market. The next market we're looking at is silver. And silver actually is all green today. Look at this. Bingo. All green. It's currently trading at 32.63. The signal we had was at 32.74. And again, that to me is basically, this is how I see the pattern of this market right now, is that we've seen the move up, we've had the correction. The correction came in, I think, is around 50%. And now we're going to see another move to higher levels. That's how I see this market. So the other thing I could show you very quickly is the Fibonacci retracement. And we go from the highs here, just around these levels here, down to the lows. And you can see we hit perfectly on a 50% Fibonacci retracement, and now we're starting to come back up. Plus, we have all of our trade triangles green. Now, this is something to pay attention to because it's one of the few markets that is showing you all green, and especially in the commodity sector. So let's move on to our next market. And this is Delta Airlines. Delta Airlines flashed a signal to be a buyer, and it's plus 100. I like the way this market has formed a chart pattern, and let me just show you what I mean by that. Is that you're coming into this sort of base building. And I would say if we see this market close over the 1050 area, it's 10.44 right now, but even nonetheless, you have the situation. 1049 was the buy point on the monthly. You've got all your other trade triangles very positive. A plus 100 indicates the trend is higher. Now, someone's buying this stock. Remember what we talked about? It doesn't matter who puts it up, but the reality is the momentum here is on the upside. And potentially, you could move from the 850 level, let's say the 1050 level, to you could be up to the 12 level in not too much time. Now, it doesn't sound like a lot of money, but percentage-wise, it is, given the markets we're seeing today. So, pay close attention to Delta Airlines, symbol DAL. So let's go to our next market. Next market we're looking at is it's an ETF. It's an inverse ETF, and basically that kicked in today, indicating that the trend is down. It's a QQQ, which means the inverse, this market goes up, and the trend is down in equities. So that's something to watch very carefully. But it's giving you the signal, and you should be respecting that signal. Now, two stocks to get out of. Monsanto is one, kicked in today, and that kicked in at 84.86, and you can see we're currently trading at 85.94. Not a big deal, but the reality is if you really wanted to be conservative on this and really get a really plunk for your money, sell it if it goes below 84. I would not have a problem doing that, but you should be really short this market. You can see we got out at 87.57 based on our weekly. And again, this is how important the weeklies are when you filter your trades, and that's how it works with MarketClub. Trend, big trend, the monthlies on stocks. Timing-wise, you use the weeklies for getting in and out of the market. Next market we're looking at is DirecTV, symbol DTV. As you can see, that was a symbol that came in today. 48.01, be a short, it's 48.90. So if you want to short it, you could actually sell it at a higher level. You may want to wait tomorrow. You may get a better price to sell it, but nonetheless, the signal is here. And you can see that this level right around the 48 level is very, very key area. We traded at 48.11 and 4,800 today. If you want to be conservative, you could just wait for this market to break below the 4,800 level, or sell it maybe back when it gets to around the 49.50 area. So they're the markets to be in and out of today. I'm Adam Hewison for MarketClub. I hope you're having a great day trading. We've got a lot to think about. Don't think about too much. Go with the flow. Go with the markets because they tell you what they want to do, and don't pay too much attention to the fiscal cliff. It'll drive you crazy. And don't worry about Europe. That'll drive you crazy. Just let the markets tell you what they want to do. I'll see you tomorrow with the big show. Adam Hewison for MarketClub. Thanks for stopping by.